Ladies and gentlemen, good evening. This is Christopher Aaron. Welcome back. It is May 1st, 2019. I'm back in the studio for one of the solo updates again this week. And it was a very interesting day today in the markets. I want to talk about this, what we saw after the Federal Reserve meeting today. Gold falling, but it was actually quite interesting if you were watching this intraday. I was following the minute by minute as Jerome Powell was speaking. So I actually want to show you what happened here. And then in the second part of this video, we can make some projections as to what is going to happen to gold over the intermediate future. So let's take a look. This is Jerome Powell. He spoke today, the head of the Federal Reserve here in the United States. So as I said, there was no change in interest rate policy. So this was basically a non-meeting, if you will, as far as policy was concerned. There was a slight technical shift in another one of the rates that they control, that they altered by an extremely small fraction on what they will pay to banks and reserves. But as far as the official change in interest rates, there was no change at all, no change in the bond selling program, the balance sheet normalization, basically just no change at all. But this was the big thing that we saw at the meeting. And this was a quote from Jerome Powell's statement. On a 12-month basis, overall inflation and inflation for items other than food and energy have declined and are running below 2%. So remember now, the Fed has an official policy of a 2% inflation target. They never had that all throughout the last 100 and some odd years of existence. This is relatively new in the last 5 years or so that they even have this policy. But the important point is that he said, so inflation is lower than the 2% policy. Okay, now we can argue whether or not this is true in reality. And of course, I don't believe this is true in reality, but this was the statement. That's what I'm trying to bring to your attention. And the other important point was that he said that this low inflation that he's talking about here is transitory. Okay, in other words, he does not believe it is going to last. Now, it's very interesting to think about the market's reaction here. So first of all, if low inflation is transitory, would it not mean that higher inflation is going to come, right? If low inflation is transitory, high inflation is going to come. And would not high inflation be good for precious metals, especially gold and silver? Right? This is the logical response that you would take from something like this, where low inflation is transitory. There's going to be higher inflation coming. But we will look at the market response here. Now, the other side to this, though, is that if low inflation is transitory, it implies that there is going to be no need to cut interest rates. And this is the key. The market expected that later this year there was going to be an interest rate cut. And Jerome Powell, by saying, look, we already have inflation. Yes, it's low, but it's going to be rising. He's saying basically we are not going to need to cut interest rates because higher inflation is going to be coming. Okay, so keep in mind, the market was expecting a hint of an interest rate cut later this year. This is the big thing. So look at how gold responded. Now, it's very interesting to notice the timing here. The official decision was at 2 p.m., okay, which is this white line right here. See this? So notice that gold actually rose when the decision was announced. But you know what happened right here at the peak? This is when Jerome Powell started speaking. So first, when it was just the policy announcement of no change, gold rose. And then when Jerome Powell said low inflation is transitory, boom, gold completely reversed. Gave back all those gains, made a new low for the week, and we'll see what happens here in the overnight hours. Okay, so just keep in mind, it was when he said inflation is transitory, which implies no need for rate cuts. The market was expecting a hint of rate cuts, and this is why gold sold off. Same thing for silver, except silver has been acting weaker than gold. We can see silver did not eclipse the peaks from the last 2 days, made a new low. silver are firmly in bear market territory at this point. Now, with this in mind, okay, and just remember, I'm not saying that I agree with gold's response here to sell off. I'm not saying that I think it was the logical thing, but if there's a point that I've been trying to make here on this show for the last number of months is that we don't have to agree with the market. The market can act completely irrationally for as long as it wants to, but we had better pay attention to what the market is actually doing, and that is what we attempt to do here. Now, looking at the technical update, we're talking about the intermediate term. We're looking at the last year for gold. Okay, here was the low at 1166 last August and the rise out of August. Now, here we are right now. This is a very interesting technical position for gold to be in. Okay, the important points that I want to draw to your attention, and mind you, all these colors have a meaning here. So if you need to pause the video, look at what everything means here. There is a meaning and a rhyme and a reason to everything. So we're looking at here at this primary, these are the most important points, the primary rising channel support. Look at the hits. This started the absolute low. Look at the hits here. 1, 2, 3, 4. Boom. Look at that hit right there. And is it any question that's where gold bounced today, just above 1270. Excuse me. So primary support coming in here. Now we have something else, which is this neckline support, which was slightly rising, this black level here. That was broken just a few days ago, attempted to recover this support, and you can see that failed. Now, what am I talking about neckline? That is of this pattern that is called a head and shoulders pattern. We are looking at what looks like a left shoulder here, a large head, and something like a double right shoulder. So it takes the shape of a silhouette of a human being. And we had a flash update going out last week to premium subscribers. We were talking about the breakdown here of the neckline. Now, gold's in a very interesting position because it has broken lower from the neckline. And this gives an official target, which is equal to the amplitude, $63, of the advance above the neckline subtracted from the breakdown point. We'll look at that target in just a moment. But we still have gold rising along this primary channel. So can you see that there's a conflict between one pattern, which is calling for lower gold, and the support that's coming in right here at this primary channel? Now, here's where we have to look at a lot of leading indicators. We did that extensively in the premium update that went out last weekend. I'm going to give you the short of it here, which is that there's this window. You can see here in this green, this sort of triangular shaped window that roughly corresponds with the next 3 weeks or so toward the beginning of June, where if gold can just hold this rising support, this primary channel support, it could negate this head and shoulders pattern. Okay, and all we're talking about is that there's traders who are keying off this pattern, the head and shoulders, and there are a separate group of traders who are coming in and they're buying along this primary support. Now we can see they were pretty weak today. Today the reaction was decisively negative for gold. But if somehow this rising cohort of buyers that are coming in every several months along this rising trend, if they can just hold this for the next several weeks, they could negate the technical implied pattern here of the head and shoulders. What is my take? What is my take on this? What is the highest probability? We talked about this with Francis Hunt last week. We were talking about on balance probability is the phrase he used. I just say highest probability assessment. You know, we can talk about conflicting data. What is the highest probability assessment? In my opinion, that is that the lower target is going to manifest. I think it is a matter of days here, perhaps even tomorrow, that gold breaks this 1270 level, and we will be looking at a lower target of 1,220. So I think this is coming up within the next several days, certainly within the next 1 to 2 weeks. Look for that. It'll look like something like a very strong down day that will break this lower channel support. This is what I think is coming for gold. Now, as we talked about last week, from a technical basis, you have to, anytime you're making a technical based assessment, you have to come up with that level where you identify in your own mind, when would you be wrong? When do you admit that the scenario you expected is not playing out? And for me, that is this downtrend that formed at the high here of the head, matching this peak nicely, coming just above this peak. If I were to see this declining trend line here broken, which right now comes at about 1305, about $30 higher than where we were today, I would admit that the target here that I have outstanding is most likely not going to manifest. But my expectations, once again, to not mince words, are that gold is going to break the channel support. We have a lot of leading indicators that we look at. I expect gold is going to break support and move down lower to 1220. Now, this is an intermediate target only. This should happen within the next 1 to 3 months. And we are not saying anything beyond that point, because beyond that point, there are about 5 or 6 indicators that I have to look at when we get into this target zone, which is going to give me another assessment as to whether do we continue lower into, a full-fledged bear market, or is this a major inflection point and gold can round up into the third and the fourth quarter of this year and finally break this target, this higher level here. So once again, intermediate term targets. Sometimes when there is a long-term target, sometimes you go with intermediate term targets. We are talking intermediate here. So I do offer a premium service, just to let you know, and subscribers will be knowing whether or not that lower target negation level is triggered. This goes to premium subscribers first. They will also know, assuming we approach that 1220 target, they will also be the first to know whether or not we keep going lower or whether we have a sizable bounce happening at that point. That is called Precious Metals Intelligence. You can find out more about that right on the webpage. Now, there's something else that I do with individuals, just to let you know, and it's consultations by voice and by email. Because notice I'm talking about these technical targets, but I have said nothing here about what one should do, right? I'm not saying, just because we have a lower target, I am not saying that you should sell all your gold. I'm not saying that you should initiate a short position. I'm not saying you should sell all your silver. I'm also not saying you should buy a lot of gold right now. So this is where this type of analysis gets highly individual dependent. For someone who has 100% of their assets in precious metals, and they have a use for that money, let's say 1 year from now. Let's say they want to buy a house a year from now, and you have 100% of your money in precious metals. Having a lower target like this, and some potentials for perhaps even lower targets, very well could necessitate that you take some defensive action. Or let's say you're retired, okay, and you're going to need this money to live off of over the next 3 to 5 years. Having some lower targets could mean that you take some defensive action. Let's think about another scenario. Let's say you are in your 20s or you're in your 30s and you have a pretty decent income and you are not going to need this money for the next 5 to 10 years. You may have a different thing that you consider, and that may be you just wait. Okay, let's say you're buying every 1 or 2 months. We have a lower target. Maybe you just wait until that lower target gets here. You see what I'm saying? So a huge difference. Now, let's say you're a short-term trader. Short-term trader, I would say this is a time pretty soon, as long as we're in that green triangle, this is a time to get aggressively short, because I think we could have a quick $40 or $50 down move coming here in gold. That could make you some significant profits if you take a short position. Of course, keeping in mind the lower target negation level. So do you see what I'm saying? I provide technical analysis, but then for the individuals, this is why I offer this service, because I can't come out here and say, first of all, I can never say what you should do. I'm not a financial planner. I'm not a registered investment advisor. I publish analysis, and I publish exactly what we are doing here. I can help individuals to strategize. I can come up with if-then scenarios, and then you have to take that and make sure that it applies to your own life. Okay, so if you'd like to work with me, just know that I don't take any fees or anything. I'm purely independent from all the gold funds and the silver funds and the mining companies. I work entirely off of individual subscribers who support this channel and who support my work. So you can reach me on the homepage if you want to. There is a new service called Global Market Intelligence coming up. There's a link below to receive a notice when this is launched. We're going to cover not only precious metals, but oil, natural gas, platinum, palladium, stocks, bonds, and currencies as well. I want to say thank you once again to the supporters of this channel on Patreon. It means a heck of a lot to me that you're supporting this work. I really hope that you get some value out of this. Once again, the takeaway here for gold is that markets do not have to act rationally. So we see, I mean, this is one of the clearest examples of a market where, what did the Fed basically say? The Fed basically said there's going to be higher inflation in the future. Yet gold sold off on that. The complete opposite of what it should do, to put that word should in quotes. And why is that? Is there manipulation? Yes, of course there's manipulation. But there's also this thing called market expectations. And the market was expecting a hint of a rate cut. And the implication today by the Fed is that there's no hint of a rate cut coming. And so gold sold off. So important to keep these things in mind as we look at lower targets. Thank you. I will see you this time next week.